This conference will now be recorded.
Hey everybody, it's Daniel here from Improvest. Hope you're all doing well. So, I want to talk about inflation, and I want to look at a couple of inflation metrics with you from few countries out there. And the narrative that you're seeing in the news, in the media, especially by certain government officials, certain leaders saying that, hey, we're winning on inflation, we're, getting this thing down and everything's going to be fine, which is basically giving also the markets this soft landing narrative that, hey, it looks like, yeah, inflation is coming down and that, we are, we might actually see the economy do well, even though as inflation's coming down. And don't get me wrong, right? In certain areas for sure, right? You do see, like for example, in the US, inflation did peak around 9.1%. And yeah, it did come down and has been coming down, especially the headline number down to around 3%. And now that number, and especially the headlines number, is very important for it to come down because that's what the consumers see, right? The gasoline prices and whatnot. And the headline number is heavily um, moves on the volatile numbers like from gasoline, which is causing that number to really look weaker and weaker, right? But if you look at other components like the core number and you look at other areas as well in the CPI report, it doesn't look like it's better, right? Definitely there's a lot of pain that the consumers are still feeling. So yeah, the leaders can come out as much as they want and say, "Hey, look, we're winning, we're winning, we're winning," and it might be all political. It might be that, hey, they're saying this because they do want to make sure and engrave that in the consumer's mind that yeah, inflation is coming down, but it sure doesn't feel like it, right? Especially when you go and you look at the grocery prices, look at the food, the restaurant bills, right? The mortgage costs, the rental prices, housing, etc., they're still up there, right? And it's still putting a lot of strain for a lot of consumers out there. And the thing is, why I want to show you this is that not only this is already bringing a lot of pain for people, but it's not done. It's not finished here, right? This can definitely change at any moment. Yes, inflation is coming down right now. We are seeing disinflation. So yes, we are seeing disinflation. Um, However, that can definitely change come, let's say, September and onwards, especially if oil prices start to pick up. And you're starting to see some strength in oil prices. And ends up if oil ends up pushing up higher and higher, then what will that do to the consumer confidence? What will that do to the central banks? To also all the rate hikes that are being done, and also with the headline inflation number that will move up, right? Unless it's manipulated or something, but definitely that number will move up and it'll bring more pain. Why? Because guess what? The central banks have to do something. And the central banks, if you listen to their communication and what they're saying out there, right? You listen to, depending on where you live, let's say Bank of Canada or the US. I like to really follow the US Federal Reserve, right? And you hear what they have to say. They've been saying they want to keep rates higher for longer because they don't want to make the mistake that they made last year, which was basically saying that, hey, yeah, inflation is transitory. They want to avoid that because if they make that mistake again, and they said this, right? The US central bank said this, that we want to keep things tight because we want to avoid of prematurely going out there and cutting rates too early, which then causes inflation to move up. They're very scared of another uptick in inflation, right? And if that happens, which can happen, because if you look at oil prices, they've been trading sideways, right? If you get now oil prices to jump up from $70 a barrel to 80 to 90 to 100 to 120, 30, and so on, and you get this massive rally in um, oil prices, then that's going to cause definitely panic for the central banks and for everyone out there because inflation is going to be higher. They're going to hike more and they're going to try to really cause this ugly hard landing to come sooner than later. So the economy, yes, when you look at it, the growth is hurting a lot in a lot of countries. The inflation is still not, no one has won on inflation yet, right? Except you could argue maybe, let's say, China. China's in a worse off situation there, right? You're seeing negative inflation numbers there. But when you look at the Western countries, they have a long way to go to get to looking like China. And there can be just simply one thing, right? And that's oil prices moving up that causes things to just completely mess up and really get ugly, right? And you're seeing that already in the oil prices. You're seeing somewhat of an uptick, but we haven't seen a crazy rally so far. And if we do see it, it will be very interesting how the central banks will react, and very likely they will react to being more and more aggressive. That would mean that you could see in the US the interest rate, the federal funds rate, going above 6%. We could start talking about 6.5%, maybe even going to 7%. Probably something will massively break by then, right? And then that would, in hopes, bring inflation down. Because if you look in the past, recessions have done that in the past, where every time there's a recession, inflation does come down to the 2% target and actually below. So, anyways, let's go over some of the inflation metrics, discuss it a little bit. So, as we know, and as we already talked about, this is the US inflation metrics. We see that the headline number is 3%. Great job. What a win. Remember, that's being manipulated, that's being affected by the gasoline prices, by the oil prices, right? That's why that number is down. And now, although the headline number is what the consumer, sees and talks about, and the media talks about, but what the central banks worry about is the core CPI, which is still up there, still sticky at 4.8%. Now, the super core number, what people may argue, where it takes out housing and shelter, right? That is at a very good area. It's actually flat, right? The last number came in flat. So, could you argue that the Fed is done there because, yeah, inflation has, they won on inflation? Well, done in the sense that maybe they got one or two more rate hikes and then they're pausing, but don't expect rate cuts. There's no way. There's just no way, right? You're not going to get a rate cut very soon unless, shit hits the fan or something happens, right? So definitely, you can expect that they would, if they're going to pause, they're going to pause for some time, and the average pause tends to be 6 months to a year. So if they start to pause, let's say they got one more rate hike to go, or two according to them, but they got a rate hike coming up this week, and if they hike rates, right, some argue that, hey, this is the one and done, and then they're pausing for the next 6 months to a year, right? So yes, numbers look good on a headline point of view, but look at the core, and the core is higher because 70% of this number is the reason why it's up. 70% comes from the shelter component, right? That's keeping it higher up there. You could argue the mortgage costs, the interest rates, that has to do with play, rent prices moving up because the interest costs are moving up. So that's what's keeping it sticky. So how do you fix that? Well, the only thing that I see from listening to what the Fed is saying, not from my opinion, from listening what the Fed is saying, is that they want more inventory to come online, which would mean that these maybe investor homes or these homes that people own, they want them to sell, and maybe even sell at a loss, which would hurt them, right? So they want certain people to be hurt in order to get inflation to come down. They're just not saying that to you black and white, right? The same story for Canada. The same story for Canada, right? Yes, 2.8% for the headline number. Woohoo, right? They're winning, but are they really, right? Are they really? And I'm going to get into that in a second. The core number is still sticky, 3.2%. But you could say, hey, Daniel, look, it's not so far from the 2% target. Yeah, let's not forget what I said in the beginning. If things start to pick back up, right, especially the gasoline numbers or the oil prices, that will make things worse off. And the Bank of Canada said that they're going to keep rates higher for longer and that they expect inflation to get to 2% by 2025, meaning that they expect some volatility in the numbers. They expect the numbers to maybe even spike up in the next couple months or so, right? Do they see oil prices moving up? That's a possibility because oil prices have been ranging for some time, and that will definitely affect the CPI numbers. Now, this number here, 2.8%, don't get fooled by it. Again, this number is low because of the oil prices. And if you look into the CPI report a little bit more for Canada, right? Yes, 2.8% for headline, as it says here, 3.4% for the core number, right? Or 3.2% it should be. Sorry, that's headline number for May. I read that wrong. So 2.8% June, and then 3.4%, which was in May. So yeah, the headline number is 2.8%, but then this is because of gasoline. So if you put back gasoline, the actual headline number is 4% in June and 4.4% in May. So this number 2.8%, if you put back, if you exclude the gasoline numbers, take it out, it actually should be sitting at 4%, right? Sorry, not put back, but if you exclude it, then yes, it should be sitting at 4%. So that number is actually higher, telling you that inflation is not done with, right? You still need to see many of the components come down. Now, Canadians continue to see elevated grocery prices as well. They're up 9% grocery prices. Mortgage interest costs also up 30% in June, right? Why? They continue to hike, right? They were in pause and then they hiked and then they hiked and then they could hike also again in September and by the end of next year. So grocery prices definitely bringing pinch to the consumer. The mortgage interest cost, same thing, contributing to the most to the headline CPI increase. These two numbers. Now, when you look into the grocery prices, you can see here the meat was up 6.9%, bakery goods 12.9%, dairy products 7.4%, food preparations 10%, fresh fruits grew at a faster pace year over year at 10% in June versus May was 5%. So yeah, okay, you have disinflation, right? The CPI report is coming down, but you're still having increases in certain areas like the fresh fruit and the groceries, and also yes, the restaurants as well, and mortgage interest cost and many other places. The food purchased from restaurants also up 6% in June and 6.8% in May. Right, so a little bit lower than May's number, but still high up. So if you want to go out to eat, it's expensive. You want to get food from the groceries, make food at home, it's expensive, right? Mortgage costs, expensive. People are still feeling the pinch. So it's not done. It's not done, right? They will continue to keep QT, to keep tightening, to keep rates elevated for some time because these numbers need to come down. They're providing, they're creating that stickiness, causing the core number, as we see here, still elevated, right? 3.2. And of course, if you exclude the gasoline number, the headline number is actually sitting at 4%, not this 2.8. So you may hear that, oh, the government, the finance minister coming out saying that, hey, look, we won on inflation. This is such a great thing. Well, no, the actual number is 4%. It's just the little bit of a manipulation, a little bit of a hit that's coming from gasoline prices that's making it look low. But from the Bank of Canada's point of view, when they're looking at this, they still got a long way to go. New Zealand, right? CPI quarter over quarter for the second quarter. Year over year number higher, 1.1% versus 1, 6% versus 5.9. They're not done. What about UK, which is crazily have been in a worse off scenario, have been heavily affected by this inflation, right? Although you might get a title from Bloomberg saying UK inflation falls below 8% and breakthrough against price spiral. Well, a little bit below. Okay, how low, right? You're saying below 8%. Well, look at the year over year number, 7.9. Look at the core number, 6.9. So if we round it out, 7% and 8% still. That's no win, right? Food prices there also elevated. The mortgage cost elevated. They had a whole situation with their pension funds, the gilts, right? The yields were going up. And then, in the Bloomberg article, they said that, they're pricing in, the market started to price in that maybe they may not get 6% interest rates. No, I disagree. They're probably going to get 6% interest rates unless something breaks earlier. They're going to continue to keep things tight. And UK is in the worse off scenario because they got extremely higher inflation than the other Western countries out there. They got a very, very delicate real estate market right now. The mortgage costs are super high. The crime levels are high in the UK. The cost of living is high there. And their gilt market, their pension funds almost imploded, right? And we're not hearing about it right now, but hey, I mean, if this ends up going higher and higher, the rates, you might see something in the UK really turn worse off. Could it be the pension funds? Could it be the commercial real estate, that people were talking about in the past? Well, we'll see. We'll see what happens. But definitely UK is not done. And UK, some people might be arguing again, soft landing. Well, really? Soft landing? If we're getting a soft landing, then this inflation is not really going to come down that fast. That means rates are going to stay higher for a very long time, and probably something will happen by then, right? Oh, who knows? Maybe I could be wrong too. Maybe it is a soft landing, but I completely disagree with that. Right. So I think UK is in a way worse off scenario than the other countries out there. Right. You look at the European inflation numbers as well, the CPI numbers there, year over year, core CPI 5.5% higher versus the 5.4%. The CPI year over year headline, no change there, sitting at 5.5. So you've seen, the core components still up there, right? Still up there. So definitely, overall, when you look at all of this, you look at the bigger picture, right? Why I show you this, why am I showing you all these inflation metrics, is when you look at the bigger picture, it tells you, again, not from my opinion, but tells you from looking at the data that how would a central banker react to this? How would the central banks react to this? The ECB, European Central Bank, the Federal Reserve, the Bank of Canada, right? These central banks out there, when they see that the inflation is still sticky in certain areas, and their mandate is to create price stability. It's in their website, their job description. You have to make sure you can create price stability, not crazy inflation. That's their job, one of their jobs, making sure that the employment is also well off. The banking sector, the financial sector, many other duties that they have. But when we focus here, let's just focus here on the US Federal Reserve. Their dual mandate is making sure employment is fine and inflation is fine. Right now, employment is fine according to, yes, the lagging numbers, unemployment rate, and et cetera, labor market, non-farm payrolls, et cetera, ADP, blah, 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 right? List can go on. So to them, in their eyes, looking at the aggregate and the data, It's fine there, but the inflation is not fine. So that's why they say, okay, we're going to continue to hike. We're going to continue to break things. Or maybe not really break things. They're not going to use those words. They're going to say, we're going to continue to hike because the economy can handle it. It's resilient. And then look at the stock market, look at the bond market. They're reacting, saying that, oh, okay, maybe there might be a soft landing here. And look at the news articles that are coming out right now. Soft landing, soft landing, soft landing this, soft landing that, soft. Right? Last year was all about recession. No recession. This year, soft landing. Well, will it be a soft landing? We'll see. We'll see. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.